Up next, another crude day in the oil patch as oil falls on worries that a failure in China trade talks could impact the global economy. We're going to ask a top Texas oil man why China is a bigger worry than the new tensions in the Persian Gulf. When Countdown comes right back. Breaking news this hour, oil getting caught in a game of monkey in the middle as China trade tensions escalate. This as U.S. sanctions on oil exporters in Iran and in Venezuela continue to keep investors and the markets on edge. But as the U.S. tightens its grip on Iranian oil while boosting its military presence in the Middle East, is this an ominous sign of things to come in the oil market? Let's bring in our next guest. His company provides infrastructure to liquefied natural gas and crude oil shale drilling in the U.S. Crestwood Equity Partners Chairman and CEO Bob Phillips. Bob, good to see you.
Hi, Lauren. How are you? Good afternoon.
Good. Thank you for joining us on a day when we're trying to figure out where the oil market is headed. We have competing forces. We have supply and demand. When you see this geopolitical tension, particularly in the Middle East, you think, okay, prices should go up. But then we have a trade war with China that's sending prices down. It seems like the trade is winning today. What's your view?
Well, it's true. There's more volatility in the market today than normal. I think it's been a tough day in the capital markets because of that. The good news is the U.S. oil and gas industry is in very good shape right now. Prices are strong. Profits are good. Many of our infrastructure plays are developing quite nicely. We've just hit record oil production of 12.4 million barrels a day in April, and we're exporting about 2 million barrels a day. So the industry itself is very strong. No doubt that commodity volatility has an impact on future thinking about the industry. But as of now, I think we're in pretty good shape in the U.S.
The Energy Information Administration raised its forecast for both oil price and production today. The price is $62.79, so a bit higher than the $61.40 where we closed today. How do you feel about $62.79?
Well, it's a great price for our U.S. domestic producers, particularly relative to Brent prices at about $69.70. Certainly, we're on the right price side of the cost curve in terms of the export markets. And most of the great shale plays are very economic to produce as low as $35 to $40 a barrel. So, again, the industry is quite healthy right now. And that's a price that I think promotes continued supply development, but doesn't damage demand. Both here in the U.S. as well as around the globe. Any
bottlenecks that you're worried about?
Primarily the Permian. It's been the story for the last couple of years. Of course, the Delaware Permian is the largest of all the great shale plays in the U.S. About 50% of the rigs running in America are operating in West Texas and southeast New Mexico. It is a very long-term source of supply. We're infrastructure short today, have been over the last several years. A number of new pipeline projects are coming on throughout 2019 and 2020 that will help balance the market by getting that big increase in oil and gas liquid supply from the Permian over to the Gulf Coast to hit the export market.
Yeah, and that's just one of three core areas, the Permian Basin, for those onshore rigs. One of the other areas is the Powder River Basin. And your company, Crestwood Equity Partners, announced a $485 million acquisition for the remaining interest in the Powder River Basin from Williams Partners. How is that acquisition going?
We did just close that on April 10th, bought out my partner, Williams. They've been a great partner for the last 4 or 5 years as we built out the initial gas gathering and processing infrastructure to support the growth of our great customer there, Chesapeake Energy. It's a play that is still very early in the development cycle. The Powder River Basin, located in eastern Wyoming, has the potential to be a great additional oil basin. Not quite as big as the Delaware, but certainly one that will bring new supplies to market. And Crestwood's in a great position. We're really the largest gas gatherer and processor in the basin. By consolidating the interest with Williams, we have an opportunity really to reach out to other producers in the area, such as Anadarko, who has a significant land position and is just now starting to develop their properties in the Powder. So we think of it as early mover advantage, and we're excited to own 100% of the asset.
Yeah, and I know a deal is going on with Anadarko, and I know you can't talk about it, so I'm not going to ask. But I do, Bob, have to ask you this final question. Oil is down today, but oil prices were plunging earlier in the day. They came off their lows on a CBS News report that the U.S. is deploying B-52 bombers to the Middle East. How much could this tension in that sensitive region affect the markets?
You know, Lauren, it seems to always drive a lot of fear in the market relative to the Iranian production, and just the overall geopolitical tension in the Middle East seems to unsettle the market. What we found cycle after cycle, though, is that the industry finds a way to balance itself. And notwithstanding the geopolitical tensions, there's significant oil production capacity in the region and plenty here in the U.S. to make up the difference in the event we had an outage of some type. So I think those of us in the industry that watch those things hope that they get resolved quickly. But at the same time, I think we're ready to step in and supply markets with oil and natural gas and gas liquids in the event there's some kind of upset on the supply side.
Bob Phillips, thank you very much. Good to see you.
Thank you, Lauren.